Imagine a stock that has rocketed, I mean, over 1,300% in a single year.
Right, which is just an astronomical number.
Completely astronomical. And, you have Wall Street analysts practically pounding the table, screaming strong buy. They're setting these price targets that suggest this company is just this severely undervalued diamond in the rough.
Yeah, the hype is definitely real.
It is, but then, and this is the crazy part, you look at the actual charts right now, and the stock is completely trapped in a falling trend. Like, it is flashing technical sell signals across the board.
Oh, absolutely everywhere.
Right. And to top it all off, the company's own CEO just sold off millions of dollars of his personal shares. So is this the ultimate deep discount opportunity of the year? Or, are you just staring at a massive value trap?
That's the million-dollar question, literally.
Exactly. And that is exactly what we are unpacking today on the deep dive. We are putting Ondas Holdings Inc. The ticker symbol is ONDS right under the microscope. We're looking at the stock as it stands today, April 13th, 2026.
And because the numbers we're about to share are incredibly polarizing, we really need the listeners on this one.
Oh, 100%. Leaving your feedback in the comments is mandatory for this one. We need to know what you think. So please, go ahead and like this video, subscribe to the channel, and let's get into it.
Yeah, it's great to be looking at this one today because Ondas Holdings is, well, it's the absolute definition of a market paradox.
A paradox how?
Well, you have these fundamentally opposing forces pulling this stock in completely different directions at the exact same time.
Okay.
So our mission today is really just to cut through all that noise.
Mm-hmm.
We're going to analyze the latest news, the financials, the technicals, and, really break down the best case bull scenario versus the worst case bear scenario.
Okay, to even begin to understand where ONDS is today, you have to look at the sheer insanity of its 52-week history.
Insanity is the right word for it.
Right, because we are talking about a stock that started at a humble low of just 69 cents back in April of 2025.
Wow, 69 cents.
Yeah. It was practically a penny stock. And then fast forward to January 2026, and it hits a meteoric high of $15.28.
I mean, a 1,314% rise in less than a year. Those are the kinds of numbers that they just create this incredible fear of missing out for everyday retail traders.
FOMO is real.
Exactly. It's the kind of chart that makes people abandon logic and just chase the momentum.
But the current reality paints a very different picture. Today, the stock is trading at $9.13. It was down just slightly, about 0.11% in the latest session. But if you zoom out, it's currently in this heavy, prolonged consolidation phase.
Right. It's lost roughly 40% of its value from that peak in January.
Yeah, a massive drop. Okay, let's unpack this because looking at this chart, I'm picturing a rocket that successfully cleared the atmosphere, but right now it is shaking violently in orbit. Like, is this consolidation phase just the stock stabilizing, cooling off its engines for the next push, or is it completely running out of fuel and getting pulled back down to earth?
To answer that, we actually have to shift our focus away from the daily stock price. We need to look at the company's actual life cycle.
Okay, what do you mean by life cycle?
Well, what you're seeing on that chart, that violent shaking you mentioned, it's a direct reflection of a massive and incredibly painful operational transition. Ondas is, they're moving out of their purely developmental phase and trying to force themselves into rapid scaling.
Meaning they aren't just designing the tech in a lab anymore, like they actually have to build it and deliver it at mass scale.
Precisely. And scaling a hardware and technology company, especially in the defense and autonomous systems sector, it's notoriously volatile.
Because it's not just software.
Right. It's not software where you just copy and paste code. You have physical supply chains, manufacturing bottlenecks, massive upfront capital requirements. Think about it like this: jumping from a development phase to a scaling phase isn't just making more of the same product.
What is it like then?
It is like going from cooking dinner for your family in your kitchen to suddenly running a massive commercial catering business overnight.
Oh, wow. Yeah, that would be chaotic.
The logistics, the supply chain, the overhead, it entirely breaks your current system before you can build a new one. The stock price is swinging because the market is trying to price in a company that is fundamentally changing its operational DNA.
That transition makes perfect sense, but it requires a ton of capital. If we want to know if this company can actually survive this scaling phase without just collapsing, we have to look under the hood at their financial engine.
The financials are wild on this one.
They really are. We need to look at the income statement, the balance sheet, and the cash flow for fiscal year 2025. And I will warn you, this is where the numbers get really crazy. The top line revenue is explosive.
Oh, absolutely massive.
Yeah, they surged over 600% year over year to hit $50.7 million. And they finished the year incredibly strong, bringing in over 30 million just in the fourth quarter alone.
And that right there is the rapid scaling we were talking about, showing up in the real world. A 600% revenue jump proves they are finding a genuine market for their technology.
Right, they're not just theoretical anymore.
Exactly. They're winning contracts and getting actual hardware out the door.
But here is the paradox. While the top line is exploding, the bottom line is just bleeding out on the operating table. They posted a massive net loss of negative $133.4 million for the year.
Yeah, a brutal number.
Brutal. That brings their earnings per share down to negative 53 cents. In Q4 alone, they burned through $38.75 million in operating activities.
Just burning cash.
Right. And now I have to push back here because if I'm running a business and I make $50, but I have to spend $130 just to get that $50, I mean, that is not a sustainable business model. How does a company survive burning nearly $40 million in cash in a single quarter without going totally bankrupt?
What's fascinating here is how the company anticipated that exact cash burn. You're completely right. Historically, burning that kind of cash is a death sentence for a small tech firm.
It's a ticking time bomb.
It means the clock is ticking, yeah. But let's look at the balance sheet, because they secured a massive lifeline just in time.
Just in the nick of time, really.
Exactly.
Oh.
In January 2026, right around the time their stock was hitting its absolute peak of 1528, management executed a financing round that provided $960 million in net proceeds.
Wait, they raised nearly $1 billion.
Nearly $1 billion, yeah, right at the top of the market.
They capitalized on the hype perfectly.
They did. And that move completely flips the immediate liquidity narrative. If we do a financial health check on them right now, they aren't struggling to keep the lights on. They're sitting on a massive cash balance of almost $594 million.
That is a lot of cash.
Huge. Their total assets are sitting at $1.13 billion compared to total liabilities of about $691 million.
So they have plenty of breathing room.
Right. So yes, they're burning cash at a terrifying rate, but that cash balance isn't just survival money anymore. It is an intentional, calculated war chest. They're gearing up for major upcoming acquisitions to really fuel their pivot into the defense sector.
Okay, so they have $1 billion war chest and a massive pile of cash, which is obviously a huge structural advantage, but that brings up a glaring contradiction in the data. If the company has this much capital and they are seeing 600% revenue growth, why on earth are the technical charts acting like the company is going under tomorrow?
Because, well, the market doesn't just trade on a long-term balance sheet. It trades on immediate momentum, market sentiment, and, algorithms that just react to price action.
And the immediate price action looks incredibly weak. Let's break down these technicals, because they highlight a serious short-term struggle inside of this company's broader long-term story.
Let's do it.
Okay, let's look at the Relative Strength Index, or RSI. Right now, it's sitting totally neutral, right in the middle at about 45.36. Think of the RSI like a rubber band, right?
Yeah, the rubber band analogy is perfect here.
When it's stretched too high, the stock is overbought and due for a pullback. When it's stretched too low, it's oversold and cheap. But right now, the rubber band isn't stretched at all.
The stock is just floating in limbo,
Yeah.
waiting for a catalyst to push it one way or the other.
Exactly. But then you look at the MACD. For anyone unfamiliar, the MACD is basically a radar for stock momentum. And right now, that radar just crossed over into negative territory. It's at negative 0.067.
Which is not great.
Not at all. Algorithmic traders and technical analysts view a negative MACD crossover as a giant flashing sell sign.
It tells the market that the sellers are currently in control of the steering wheel.
And the moving averages confirm that. Both the 50-day, which is at 932, and the 200-day moving average at 992, they're acting like psychological ceilings for the stock right now.
Because the current price of 913 is trapped beneath both of them.
Right. So every time the stock tries to rally, it hits that ceiling and gets rejected. For the last 90 days, the stock has been sliding down this falling channel. If you were looking for where this bleeding stops, the immediate support, like the floor where buyers finally seem willing to step in, is down at $8.97.
And resistance is right above it.
Yeah, resistance is at 931 and 97. For this chart to look healthy again, for a true bullish reversal to take hold, it really needs to break back above $10.40 and stay there.
So for a purely technical standpoint, the stock is just incredibly heavy. The algorithms are pushing it down, and human traders are, well, they're hesitant to catch a falling knife.
It's heavy, and here's where it gets really interesting. We have this glaring disconnect between what the technical charts are doing, what Wall Street analysts are saying, and what the people inside the company are actually doing with their own money.
Oh, the insider selling. Yeah.
Yes. Let's start with Wall Street first. If you look at analyst ratings, there is a massive strong buy consensus. We are talking about 8 to 10 different professional analysts covering this stock, and their average price target is $20.12.
That's massive.
It represents a potential 120% upside from where it's trading today.
I mean, they're looking at that billion-dollar war chest and the revenue growth and projecting massive success.
But then you look at the insider activity, and it tells the exact opposite story. Company insiders, the people who literally run Ondas, have sold over $10.5 million worth of their own stock in the last 90 days.
Which is a huge red flag for a lot of people.
A massive red flag. The CEO, Eric Brock, sold off $4.6 million worth of his shares in late December 2025. Director Ron Stern offloaded $6.7 million. And on the flip side, there has been absolutely zero major open market buying from insiders in the entire first quarter of 2026.
Wow.
Nobody inside the building is buying the dip.
This is the ultimate aha moment for retail investors. It really highlights a dynamic that frequently creates a trap for everyday traders.
How so?
Well, you have analysts selling the future potential to keep the hype train moving, but company insiders are trading on the present reality. When those two diverge, when Wall Street says buy and the CEO says sell, you are looking at the exact mechanism of a retail trap.
That makes a lot of sense.
Right. Retail traders might blindly look at a screen, see an analyst rating that says strong buy with a $20 target, and jump in. Meanwhile, the stock is trapped in downward momentum, and the executives who know the daily operations, the supply chain struggles, and the actual pipeline better than anyone else, they were taking massive profits off the table.
That dynamic leads directly to the core debate surrounding ONDS right now. Is this stock genuinely an undervalued deep discount because of this recent 40% pullback? Or is it a classic value trap designed to separate retail investors from their money?
The classic value trap debate.
Yeah, let's look at the valuation tug-of-war happening behind the scenes.
Let's start with why traditional value investors are terrified of this stock. The primary metric they look at is the price-to-sales ratio.
Right now, the P/S ratio for Ondas is roughly 6.59. In plain English, that means investors in the open market are paying over $6.50 for every single dollar of sales the company currently makes.
Which is steep.
Very. That ratio is 112% higher than the industry average. If you are a strict fundamentals trader, paying that kind of premium makes the stock wildly overvalued.
But, the modern tech market rarely trades on current sales. It trades on future promises. And that brings us to the undervalued argument, which relies on discounted cash flow, or DCF models.
Which sounds incredibly dense.
It does, but conceptually, it's just a financial time machine. A DCF model tries to figure out what a company's stock is worth today based on the actual cash it is projected to generate 5 or 10 years from now.
Okay, so forecasting the future.
Right. Analysts take those massive future revenue projections and discount them back to today's dollars. If you base a DCF model on Ondas's revenue targets for 2026 through 2030, the math suggests a fair value of $20.53.
Wow, so right around that Wall Street price target.
Yeah, exactly. Under that specific lens, looking through that time machine, the stock is actually 55% undervalued today.
So it all comes down to whether you genuinely believe management can hit those massive future targets. Let's lay out the bull case. This is the absolute best case recovery scenario for Ondas. What is fueling the optimism that could legitimately take this stock to $20?
The massive upside potential is fueled by 3 major catalysts. First, you have that 600% revenue growth. Despite the costs, they are proving they have a product people actually want.
Right, the demand is there.
Second, they have a record $68.3 million backlog of orders. That isn't theoretical money. Those are signed contracts waiting to be fulfilled, which provides real visibility into their future revenue.
That's a solid foundation.
It is. But the third and absolutely most critical piece of the bull case is the synergy from their recent acquisition of a company called Worldview.
Which completely changes their capabilities.
It totally transforms them. Worldview specializes in stratospheric ISR capabilities. ISR stands for intelligence, surveillance, and reconnaissance.
We're talking about high-altitude defense tech.
Exactly. We are talking about advanced balloon systems and high-altitude autonomous drones that operate in the stratosphere, providing military-grade surveillance without the massive cost of launching a satellite.
Oh, that's huge. Satellites are insanely expensive.
Right. So by integrating Worldview's technology, Ondas is deeply embedding itself into the global defense tech industry. Governments want cheaper, rapidly deployable surveillance, and Ondas is positioning itself to be the prime supplier.
That definitely bolsters the bull case.
All of this supports management's incredibly bullish long-term outlook. In fact, they recently upgraded their 2026 revenue target to a staggering $375 million, which they believe will be driven primarily by these new military drone and surveillance contracts.
So what does this all mean? Because if I am a skeptic, and, we always have to play the skeptic on this show, I look at that $375 million target and I see extreme, almost terrifying execution risk.
Oh, the execution risk is massive.
Yeah. The bear case, the worst case continuation scenario for this stock, is glaring. Hitting a $375 million target means making a colossal leap from the $50 million they just reported. You explained earlier how hard it is to scale hardware.
It's a logistical nightmare.
Jumping from $50 million to $375 million means building new manufacturing facilities, securing rare materials in a volatile global supply chain, and, managing thousands of new employees. The logistics alone could break the company.
And they're already losing money.
Exactly. You have to combine that execution risk with those widening net losses we talked about earlier. Their net loss literally tripled in 2025 despite their revenue growing.
And if they stumble during that scaling process, the financial penalties will be severe, especially when you factor in the share dilution.
Let's talk about that, because that is the hidden tax on the current shareholders. To get that $960 million war chest back in January, they didn't just find free money. They had to issue millions of new shares.
Right, which dilutes the pool.
Severe share dilution means that every existing piece of the pie just got dramatically smaller. If you held Ondas stock last year, your ownership percentage was just watered down significantly. If they miss that $375 million target and the market realizes the defense pivot is failing, the downside risk from these current price levels is massive.
If we connect this to the bigger picture, you really have a dual outlook here. In the short term, the perspective almost has to lean bearish.
Just based on the technicals?
Yeah, the technicals suggest we should expect the stock to drift lower and test that 850 to 897 support range in the coming weeks. The market needs time to digest the recent losses, the heavy insider selling, and that sheer dilution you just mentioned.
It's just a lot of bad news all at once.
Exactly. The algorithms are pushing it down, and it needs to find a solid floor before it can bounce.
It has to establish a foundation.
Yes. But the long-term perspective, that remains highly bullish, but with a massive asterisk attached to it. It is entirely dependent on their ability to execute.
That's a big if.
It's a monumental if. If they can successfully navigate the logistics of this defense pivot, secure those massive military drone contracts, and fully monetize the Worldview acquisition to hit that $375 million target, then suddenly those $20 analyst targets don't look so crazy.
They start to look entirely justified.
Exactly.
It really is a story of extreme duality. To recap everything we've covered today, Ondas Holdings presents this incredible, almost unprecedented paradox for investors. On one hand, you have 600% revenue growth, a massive $68 million backlog, an upgraded outlook, and a balance sheet loaded with a nearly billion-dollar cash war chest ready to deploy into the defense sector.
The bull dream.
Right. But on the exact other hand, you are staring down the barrel of terrifying net losses that tripled over the last year, severe share dilution, bearish short-term technicals that are flashing sell signals, and company executives cashing out millions of dollars of their own stock while retail investors are left to hold the bag.
It is the ultimate high-risk, high-reward setup.
Yeah.
You are basically betting on the management team's ability to pull off a logistical miracle.
Now, before we wrap up, we have to firmly remind you, the listener, this deep dive is an exploration of market data, technical analysis, and SEC filings. It is absolutely not financial advice.
Always do your own research.
Always. We are here to give you the data, unpack the mechanisms of the market, and help you understand the risks so you can make your own informed decisions.
And you don't have to wait long to see which way the wind is blowing. The true test for this stock is coming up very shortly.
Yes, circle your calendars. The first quarter 2026 earnings report drops on May 18th, 2026. That report is going to be the ultimate proving ground.
It's make or break.
It will show the market whether management's massive $375 million revenue target is grounded in fact in actual signed contracts, or if it's purely science fiction designed to keep the stock price inflated.
This raises an important question. And I want to leave you with a final thought to mull over as we approach that earnings date.
Go for it.
We spent a lot of time talking about Ondas's specific transition. But look at the broader technology landscape. If autonomous drone technology and stratospheric surveillance become a standard, everyday arm of the global military-industrial complex over the next decade, will early consolidation phases like the one Ondas is in right now look like minor, unavoidable blips on the radar? Or, history being what it is, will this phase be remembered as the graveyard of ambitious hardware companies that simply tried to scale too fast and collapsed under their own weight?
Oh, brilliant macro question to end on. It's the classic innovator's dilemma playing out in real time. Thank you so much for joining us on this deep dive into Ondas Holdings. Before you go, remind yourself to like the video, subscribe to the channel, and hit the comments right now. We genuinely want your verdict. After hearing all the data, the bullish catalysts, and the glaring red flags, is ONDS a massive value trap, or is it a treasure waiting to be unearthed? Let us know, and we'll see you on the next deep dive.